Hello. Today I'm going to take you through a trade idea, and I'm calling this trade a catch-up trade. So without further ado, let's just jump into it. What we've got, or the premise behind this idea, is that when sort of like a move happens in lots of markets, except one seems to get left behind. So the trade we're going to use as an example is from last Thursday, and we're going to look at Eurostocks. So on Wednesday we got CPI beat, so the number for CPI came out at 4.2. Reuters had an estimate for 3.6, so it was a really big surprise beat. And so what happened, if we look at over like the equities and bond space, if we go here US and then Europe, US equities, like say the S&P, offered on the number, pulled back, and then offered all day. Then let's leave out Europe for now. Then go over to the bond space. Well, the T-note stayed bid the whole day. Sorry, what am I saying? Jeez, what a bad Monday. T-note stayed offered all day, and then the bonds were even more offered, like they were pretty aggressive. But oddly, European equities stayed flat. Now, I don't want to assign too much of a reason to this, but maybe this could have become because the market was like long US equities, short European equities, just because like from some time ago, because of like say the US recovery was going better than Europe, so they may have put that position on, and then now using this as a time to unwind. But irrelevant for that, that may have held the market up for the day, so that set up the trade. But what we've kind of got is we're thinking, okay, we're starting to get these correlations where equities and bonds are trading in the same direction, and that's telling us we've got the market starting to worry about inflation. So we have that correlation here in the US. Now the reason it makes me believe that the Eurostocks can come down is because the bonds have offered in Europe, and so the last piece is for the European equities to play the inflation catch up. And so you can see here that Eurostocks opened here for the day. That's not cash, that's like the full day session, and closed there, so relatively in line, at least still within the prior day's range, right? Sorry, excuse me. And then the S&P opened up here, closed down here. So, that was very directional. And then if we look at bond, opened down there, closed down there, and then T-notes, open up there, closed down there. So you can see, there's a lot of difference here between these markets. So everything but the European equities really went. And so, okay, this gave us the opportunity for this catch-up trade. Now, if we go and look at the actual profiles for Eurostocks, well, we've got this inside cash session, but it's not actually an inside day. I think this day traded a bit lower down here. However, that aside, the fact that, the market is still up here when all the other markets are way down here, and the European equities, is our reason to think that we can break from this. So we do have, irrelevant of the inside day, we do have a balance here. Now, what's interesting is we have a relatively small IB at the lows of the balance, so that's quite aggressive. It's left some singles here, so now we're starting to think there's a lot lining up, and so pretty high conviction offer to play a catch up here. So, sorry, I'm not sure what happened there. So let's just quickly summarize those things. So we had US equities have sold off on the US CPI beat, closed at lows. EU and US bonds offered too, also closing at lows. Inflation expectations are rallying, but Eurostocks closed in line. So stocks opens with a tight IB at the prior day's low. So all that information is really telling us that Eurostocks really needs to come lower. Now, actually on the day, like on this Thursday, especially in that morning, US equities continued to offer And, if they're still going lower, then I suppose those, the bonds and the equities from the US would have to turn around for you to think that, Eurostocks wouldn't do this move. And so since that didn't happen, you want to look for this catch-up offer. And the IB break gives you this way to trade it, it's a way to access it. So, before we go to the ladders, we'll just quickly look at the 1 minute chart. So you can see here, this is the IB, and here, the market breaks lows and comes lower. So we're just going to look at a few things in here. So this kind of trades a bit like a liquidation, and that was how I was thinking of it. But what made this one quite hard is that, sometimes there's like a little bit of two-way in here. The market will like test the buyer, test the seller a bit, and then it'll start this kind of offer. But this one, the offer just really went. And so I got a little bit of a position on, but I really wasn't expecting it. But I suppose when you look at the information that makes up this trade, so much is pointing to it, going, and it's so far behind that I think you just needed to trust that this could go. And then we're going to look at what happened down here. So I then wanted some structure to try and place a trade, and so the market came off and it flagged like this. And then it popped through the lows, and so I sold here, and I was thinking, okay, all we need now is volume to come through. But that didn't happen. Then it squeezed me, and I got out. It's back up here, almost at the highs, which is a pain. And then the offer was a bit more firm the second time through as it came through the lows, which I sold, and then sort of worked to build a position back. So I got to full size the first time, squeezed out of it, and then had to try get all that size on again. So we'll just look at those three parts of this and just think about how we can trade it. So let's get into the ladders. So here are the ladders. Here's Eurostocks here, and it is, oops, sorry, I've changed pens. Let's do this one so you can see it better. And it's just like 5 seconds before the cash open. So let's get into this. Okay, so you can see the low of the day is just down here. So we're opening. So immediately now, 99s, 98 second offered, 97s offered as well. Now the market's selling into 96s. There was 2 lots back up into 97. So immediately this was really aggressive. And often when markets like that, they'll pull back. But you can see now it's taken 96 offered. It's 96's bid again, but it's taken offered again already. So there's really no counter rotation. And so you can see I got short here, but I didn't really love this because I still thought there was a chance that it could come up. It would have just gone one way, and often you get this counter rotation back and then finds like someone passively absorbing, and then it goes again. But there was none of that. It's just gone, taken the X price offered, taken the X price offered. And see that again, 94s offered, then 93s, 92s, then selling down into 91s. Then it's pulled back a little bit up to 93s, but it's immediately taken 92s offered, good size there. There's 30 lots bought there. Okay, it's taken bid again, but people are selling back into 92s again, and so this is, this is just a really, really aggressive open, and I hadn't experienced one like this, and it just, it really threw me off because you can see here, I tried to get filled. There was only a 20 lot on the bid, on the offer, I think, and the market's just gone 91 offered, 90 offered, selling into 89s, and so I honestly didn't know how to take this. But then when you think about what I said in the information about this trade, there was so many reasons for this to go and so few reasons for this to stay. And so actually you probably could have just sold the open. And so now we've got 88s offered. There's some selling into 87s. So you can see this really is a straight line offer. There is absolutely no counter rotation at all. All right. And so people aren't putting a lot of size on the top bid either. It's staying pretty weak. You can see there, I suppose no one wants to just get cleaned out. So the market makers maybe are a bit hesitant to provide liquidity like that. And there you go then, now straight down into 84s. Okay, there we go, selling a couple of hundred into the lows. And we've got a bit of a two-way. So, sometimes there is a little bit of buying, but it only really occurs over the bottom 3 prices, and the market's, obviously heavy. No one's like holding anything bid for very long. And yeah, I mean, like right now, look at this. You've got over 1,000 lots sold at the lows. It's so likely that the market's just going to keep going through this. So there's nothing that you're seeing that's even suggesting, even in the slightest way that, this market might turn around. Okay, so that's how it started. So really the key takeaways from there was just how aggressive it was. And then I think you had to ask the question, why is this going to go? And you list all your reasons and you go, well, why shouldn't this go? And when you think about how far everything else has gone, and what the markets did the day before and the information the day before, and the fact that, European bonds have offered so much, i.e. the yields have increased, then, this really had to go. And until everything really ripped back, reverse, talking like equities in the US, bonds everywhere, this market really had to offer. So you just needed to trust in this. Okay, now, not on that, sorry. I need to get to the next part. So now we're going to look, you can see on my 1 minute, just down here, that the market's been, I've changed the pen again, sorry, that it started to flag at the lows. And so then I thought here, okay, there are 2 things this could do. One, you can find access with the market popping here, failing and coming back down and trying to sell it. Or the second one, I was just looking to see if we got volumes coming through the lows. And so let's just get into this. Okay, so sometimes I find Eurostocks price action can be pretty tricky to read. And so especially in balances, I think this is one of my probably weaknesses with this market. And we'll see what we can get out of this. So you can see there's quite a lot trading at 84s. And the day's lows at the moment are at 80s. So maybe a better way to go about this would have been to just sell sort of near the highs of this flag. But I wanted to, find maybe because I was still thinking we could pop the top and then continue. And so I didn't want to get caught in that. So you can see that the market took the 83s, 82s, offered now 81s and 80s. Now I think that's actually, I suppose I got fooled in by this, but because often what happens, the market might say someone's short and they want to get filled long at the best price. They might just, if it's a market maker or someone big, they might just pull the bid, and then the market will trade down like that. It makes you feel that it's really aggressive, but actually, it's almost like falling through the prices, not trading through them. And it's just like, now if we draw the thing again, we had this flag, someone pulled all the prices and then the market just broke the low. But it did that with no auction. And so often if that's the case, if it's going to go, the market really needs to pull back, auction this out again, kind of just the same way you might think about profiles. I suppose this is just like the micro version, of auction theory. And so, okay, it's come out the lows, and now I'm trying to put a position on because I'm thinking, okay, if someone steps in, this is where we go. But actually the way we've got down here wasn't ideal. And really the asymmetry would then be, to let this come back up and then find where the seller is, and then start trading this. And so, it's gone, 80s was the low, it's gone 79s, and it's traded into 78s. But already, the pace down here is much slower. Think about what it was like when we broke the IB at the start. So this isn't really that aggressive, fast-paced selling that, we would have expected to see on another leg. And also, like I said before, about the way we got to the lows with, the bid being pulled. And so, okay, so I've got a position on now. But, I really put it on in a situation where the price action, in the short term wasn't really showing me an edge. So I think you could, and I suppose that's one of the dangers. If you just look at the candlesticks and think about the candlestick structure, well, coming out the bottom, okay, that's, a flag break. And gives you a reason, but just when you overlay the price action and what you're seeing on the ladder, that's when you realize that actually the thing you're thinking about is not really happening. And you can see now that the market's got back and there's 80, and see now someone's pulled the offer. And so now there's just no liquidity for everyone who's got short. So everyone who sold down here, all these like, whenever it was 3,000 lots, now have to get out. And the person that was providing the liquidity on the offers just pulled it. So now some clever person's bought down here and is currently selling up here and gets to take this profit. And unfortunately, it was me giving that profit to them, or was one of those people doing it was me. Yeah, so then I had to work my way out of this position, well, because I didn't really, like I thought after, if we take our diagram again, we have this flag, we break the lows, well then maybe we need to go take out the highs before we go again. And so I thought, okay, I'm going to wait to see what we do up here before I look for a short again. So what we're going to do now is we're going to go, if we go back to this diagram, so we've come and watched this bit, now we're going to watch what happens up here. Okay, so now you can see on this, we watched just this piece here before. Now the market's pulling back. So let's see what it shows us. Okay. All right, so the market, market's just right in the middle of that flag, so nothing really exciting yet. We need to sort of let it make a move. So I think I must have got short, I didn't actually remember this part, back in the middle of this range again, because I thought, okay, let's let this, it's kind of like balanced off again, and I thought it might go. Whatever my reason was in here actually wasn't that good. So I really did need to let this play out. And so you can see already, it hadn't found that seller. You know how I described before about the flag. Okay, we break the lows. Then you've really got to let some kind of failure, something really strong, show you now that the market's ready to go back down. You fail one way, you need to find, the reason for the other direction. And so that was just a total waste, what you saw there. So now this market, see, it's kind of like pulled the offer again, and it got back to the highs really fast with really little two-way and really little trade in general. And so then this offer, it's looking really weak. There's 30, even sometimes like 100 lots on there. Not a lot, it's not very thick, not what Eurostocks is like. And so you can see someone's buying there, and the offer's like pretending to stay weak, but it is being reloaded, sort of subtly reloaded in the background. And now it's just gone and traded down to 85s, 84s, and now trading to 83s. And so someone was really trying to suck you in there, trying to get you to pay up at the highs. And so that was, recognizing that was key. So now, I suppose you have the choice. You probably need to start selling into this with a stop up here, because this is where this big seller is. And now that you've found that seller, now that's who you want to position with. Ideally, you'd like to somehow position in here, but this market's not auctioning back. So I suppose you had to just sell and then accept that your stops got to now be up here. So I missed that, which is why I didn't get short in there. I didn't quite understand the significance in the moment. I think maybe I must have been looking at my chart or whatever on that moment. I don't think I quite picked up the price action that occurred. But you can see now it's quite offered quite steadily down to the lows of where we were. And all right, let's just keep seeing what's going on. So there's 5 lots into the low, 77's taken bid. Now I kind of know here that I want to get short, but I kind of know now that that's where the seller is. And so while we've done the flag break again, which means I think that we can just go this time, because we had the false one last, that other time I tried to sell. But then I'm also trying to be conscious of the fact that I really like this trade idea. I want to get as much size on as I can, and I can't go to full size again with a stop up here. So trying to work out now how to get some of that size back on. So here I've put some on, and actually I work my way into the rest of it a little bit later on. You can see now this is quite different to last time, where this offer is way more heavy, and now the market wasn't able to rotate back. Someone's selling down pretty aggressively. So this more sort of mimics what we saw at the highs, and you can see now on the chart, delta's really negative, where this bit here is where the other offer at the lows was, and so like here's the low of what delta was. It didn't make a new low, but right now, delta's making a new low as price is making a new low. So it's kind of telling you that what's happening in terms of the trade, so price changing, is also being reflected in the interactions on the ladder. So i.e. the order flow is selling and the price is going down. Whereas what we saw earlier on that first bit where I got short from this flag, we had a market that price was moving down, but there wasn't really anybody selling it. So there was that kind of like mismatch between order flow and change of price. So you can see here now this market's continuing to go. So in terms of finding your access, the key was really to figure out that there was the seller up there, and then you just needed to get short in and around that seller. I mean, I know I could probably be guilty of when that seller just drove and took out a couple of prices. I could definitely be guilty of trying to find a fill in here to get better risk reward. But then obviously you risk missing the move, which is exactly what would have happened here, and this offered straight down. You just had to really recognize then that this price action was really firm, like a really firm offer, and as long as that kind of firmness remained, then you could continue to go with it. So that's just a bit of finding access to this trade, and yeah. So let's just take a step back now, because we looked at access to this trade from this really specific point of Eurostocks on this day, but just as our takeaways for this session, let's just think about what we really were talking about. So we were talking about this idea of when a market's become kind of dislocated from its peers, or from what's going on in the markets as a whole, and you want to play a catch-up trade. And so in this instance, I think what's happened here is that you had this kind of lag in the European equities because of spreading. I think that point's almost irrelevant for us as directional traders, because we don't want to be trying to say exactly what everything is, because we don't know. I don't know everybody behind their computers trading, and so yeah, in some ways it doesn't really matter. What really matters is the fact that these markets, that one's kind of out of line. And so once you see that, and as long as the idea behind the trade's not been invalidated, you can play for this catch-up trade. And so an invalidation would be, if Eurostocks for some reason started breaking the initial balance high and then bidding with increasing volumes or something like that, where there's a buyer in there, that would just, that would tell you that something really odd is going on. It doesn't really fit the narrative. Or for example, if Eurostocks had have held in the initial balance and everything else had to bid really aggressively for some reason, that also would, could have invalidated it. But the thing is, the other markets are so much lower that, they could still be bidding and Eurostocks could still offer. So you had to be, really careful to think about what was going down, and, what could validate or invalidate your trade. And so as long as, the fact that, the market's now worrying about inflation and its effect on equities, because equities haven't really been pricing it, but bonds have been quite bearish all year, I think that still had a really high likelihood of playing out in the Eurostocks as it did. So yeah, you can take this idea, apply it to any market. It doesn't have to be Eurostocks, it can be anyone. But just, keep these ideas in your head. Okay, everything else is gone. There's a good reason for this trade. So long as that reason hasn't been invalidated, then, the next day it should catch up. If, for example, the Eurostocks didn't catch up the next day, then I think you'd have to ask more questions, because that would be weird. Why didn't that happen? Whereas if you're the next day, I think you have to go for this with high probability. Okay, let's leave it there. So good luck applying this to your trading, and I'll be back to talk you through something next week. All right, have a good week trading, everyone. See ya.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.